All right. Well, it's noon. We're going to go ahead and get started. Good afternoon and welcome to our Sales Tax Basics webinar. I'm Cindy Nellis and I'm with the Penn West Clarion Small Business Development Center, and we just are happy that you're here. As many of you are getting your businesses set up and ready to go, we want to make sure you have a solid understanding of Pennsylvania sales tax. Your questions may be, who needs to be registered to collect? What items are taxable? When does sales tax need to be charged? Where do you file and pay? And what should I do to keep proper records? So today we will answer those questions and more, as well as learn about sales tax exemptions, use tax, and resources to help you every step of the way as your business grows. The Pennsylvania Small Business Development Center is happy to partner with the Department of Revenue to present a 4-part series offered monthly. Today's topic, as you know, is sales tax basics. The other topics that we present are getting started with MyPath, PA taxes for new businesses, and withholding basics. So we hope you plan to join us for these other topics in the months ahead. I'll be sending this flyer as well. Just a few reminders. Today's webinar is being recorded, and we will share that recording with you along with the presentation slides and, of course, the series flyer. As participants, you have been muted and your video has been disabled. So if you have a question for our presenter, please enter them in the Q&A. Rachel has a team of experts here to help answer those questions throughout today's webinar. If you have a question for me, your host, please enter that in the chat window. And we may be using the chat as well for some interaction with our presenter. So I'd like to introduce you first to the Small Business Development Center program. We are a grant-funded organization with the mission to help businesses start, grow, and prosper. We're here to provide education, information, and tools to help your business and you make better business decisions. We primarily do this through our business consulting services and also, of course, through our training. Our consulting services are provided at no cost and they're confidential. Our training seminars are offered on a variety of topics that target the needs of our small business owners. To us, a small business is generally defined as a business with less than 500 employees. We also use our funding to provide access to database information and resources, primarily related to conducting industry and market research, financial analysis, and then, of course, implementing marketing strategies. The Small Business Development Center program here in Pennsylvania partners with many economic development organizations, and we're here to help connect you with those resources to help you start and grow. The Small Business Development Center program in Pennsylvania includes 15 centers, all located at institutions of higher education. We are also a part of America's Small Business Development Center, which is a national network that enables individuals and businesses all over the United States to access our program services in their neighborhood. The Small Business Development Center is the place to turn to for no-cost business consulting help. We are here to connect you however is needed. You can connect with us or check us out through our website. We also provide my email address as well as my center's email address. There's no wrong door here in Pennsylvania. You can connect with anyone, but we'll make sure that you connect with your SBDC in your neighborhood. Now I'd like to introduce you to our speaker, Rachel Washington. She is a research analyst in the core division, which stands for Customer Outreach Relations and Engagement Division within the Customer Experience Center at the Pennsylvania Department of Revenue. So with that, Rachel, I will stop sharing and turn it over to you.
Sounds good. Alrighty.
Looks great.
Awesome. So, hi everyone. My name is Rachel Washington, and welcome to the new business series presented by the PA Department of Revenue. I am a research analyst, once again, with the Customer Outreach Relations and Engagement Division for the PA Department of Revenue, in the Customer Experience Center. So the first thing I want to do is thank you guys for joining us today and wanting to learn more about how to properly collect and remit Pennsylvania sales tax. One thing we do want to emphasize in our presentation series is that the cost of non-compliance far outweighs the cost of compliance. So let's get started. One second. Okay. So, today we are going to cover a wide range of information relating to sales tax and the nuances that go into it. We will be defining exactly what sales tax is according to the Commonwealth of PA and how local sales tax is applied. With that, we will talk about what items are taxable, including tangible personal property, services to tangible personal property, and enumerated services. We will clarify who must collect PA sales tax, as well as what qualifies as nexus. We will also go over how to register for a sales tax license, how to calculate the amount of sales tax to collect, as well as how to report and pay to the Commonwealth. Next, we will quickly go over exemptions and who or what they apply to. Then, we are also going to highlight use tax and when it needs to be paid. And finally, we will wrap up this module by going over what resources are available to help you should you have any questions or need further assistance. So, what's sales tax? Sales tax is a 6% tax on the sales within this Commonwealth of tangible personal property, services to tangible personal property, and certain enumerated services. We will talk about each of these points individually, but before we do, let's explain what we mean by a sale within this Commonwealth. If you buy an item at retail and the item is delivered to, used, or consumed in Pennsylvania, then the sale occurred in this Commonwealth. If a business sells and delivers an item to an out-of-state location, then the sale was not made in Pennsylvania and is not subject to Pennsylvania sales tax. As you can see on this map, Allegheny shows 7% and Philadelphia shows 8%. This is because of a local sales tax. So during the 1990s, Pennsylvania legislature passed a new law imposing a local sales and use tax on certain counties. This was a tax imposed in addition to state sales tax in Allegheny County and the city of Philadelphia. The local sales tax rate in Allegheny County is 1% and Philadelphia is 2%. These taxes are deposited into a fund dedicated to pay for specific needs of those jurisdictions. The rules are the same, except that the local tax is actually based on the place of sale and not delivery. So, for instance, if I buy a meal in Philadelphia, I will be charged a total of 8% state and local sales tax on the meal. If I live in Montgomery County and order furniture from a Philadelphia store, the additional 2% local sales tax will still be added based on the location of the store where I made my purchase. So now that you're a little more familiar with what exactly sales tax is, let's review the individual taxable components. Tangible typically means something material or physical. Tangible personal property is generally physical property that can be touched, such as furniture, clothing, and like vehicles. However, there are items that cannot be felt but are still considered as tangible personal property, such as electronically delivered software or video or audio, things like that. It's distinct from real property or real estate in that it can be moved from one location to another, while real property is permanently attached to a single location. So take a look at this screen. These are some of the taxable items listed in the law. Some of these are clearly tangible, such as greeting cards, helmets, and books, while some, like telecommunications, are a bit less black and white. There are also examples here on the screen that are not specifically in the law, but they help to illustrate what kinds of items constitute tangible personal property. You can see how wide-ranging these items are. You see baseball gloves, soft drinks, cars, I mentioned videos, even digital music are examples of tangible personal property. If you buy any of these or similar items in PA or have them delivered into PA, they are taxable, tangible personal property. So a more complete listing of this is available in the Rev 717. That is R as in Rachel, E as in egg, V as in Victor, 717. So, with the passage of Act 84 in 2016, certain digital products are now included in the definition of tangible personal property. These products include videos, photographs, books, and any otherwise taxable printed matters, applications like apps, games, music, any audio, including satellite radio, canned software, including support, and any otherwise taxable tangible personal property. These items are purchased and or used in Pennsylvania, are taxable whether electronically or digitally delivered, streamed, or accessed, and whether purchased individually or through a subscription. This also includes any maintenance or updates. More information about the taxability of digital products can be found on our website. So, there are certain items of which sales tax is excluded per the sales tax law. So, these exclusions include the following: wrapping materials that are needed to deliver property, such as bubble wrap, pallets used to transport goods, shrink wrap, and so on. And anything wrapped with the package or used to deliver the package is considered exempt. Another one, which you might already know about, is grocery store food, unless it is considered ready-to-eat food, such as sandwiches from a deli. Clothing that is considered everyday wear is exempt from sales tax. So everyday wear items are articles of clothing that are not required as a condition of your employment, like a uniform, and considered to be your regular clothes. These everyday wear items are not subject to tax. So, for a little example, a t-shirt would not be subject to tax. However, a wedding dress or a prom dress, that would be subjected to tax because you don't wear those things every day. Moving on, we have caskets that the funeral director uses in conjunction with the funeral service are exempt from both sales and use tax. Regular unflavored water, including mineral waters, are also exempt. And then we have sales for resale. This is a big one for many businesses. Industries like department stores, grocery stores, automobile dealers, etc., are in the business of buying goods and then reselling those same goods. In Pennsylvania, if the inventory or goods that you are buying is for resale, you are not required to pay sales tax, given that you will charge the tax to the end consumer. Services to taxable tangible personal property. Sales tax is also imposed on services done to tangible personal property. So basically, the rule is if the item that needs serviced is taxable, then that service is taxable. So, for example, if my watch breaks and I take it to a jeweler to have it repaired, that transaction is subject to sales tax. Since watches are subject to sales tax, we like to call it taxable, then the repair service needed to fix my watch is also subject to sales tax. This slide show this slide shows some other examples of services that are taxable, which may help you to better understand this concept. I know what you're thinking. You see that first item, wrapping or packaging tangible personal property. I know I just said that wrapping materials as an example of an exempt item. This is considered taxable in this situation because we are not mentioning it being used specifically by the seller to wrap or package items incidental to delivery. So the example on this slide is referring to the service of wrapping tangible personal property, such as gift wrapping. I'll give you a couple more seconds to take a look at this slide. I know there's a lot of different services here, but these are really great examples of services that are taxable as they are performed on tangible personal property. Okay. Enumerated services. So enumerated services are those services specifically taxed. These are services that are not tied to tangible personal property, but they are specifically identified for taxation by legislation. So here are some examples of enumerated service. These can be very involved, and some actually have special rules on how to determine the taxability. All of these items are outlined in the Rev 717 that I mentioned earlier. So once again, we're going to recommend that you guys check that out if you're providing any of these services. Okay, moving on. So now that you know what sales tax is and some examples of items and services where sales tax is applicable, let's dive into who should be collecting PA sales tax. The Tax Reform Code states every person who maintains a place of business in the Commonwealth to sell tangible personal property or to perform taxable services is required to be licensed for and to collect sales tax from its customers. In other words, the law requires Pennsylvania businesses to collect the tax from the consumer at the time of sale. What it means to maintain a place of business has changed over the last several years. For an entity to have physical presence, it means exactly that. To fall under this category, a business must have taxable sales and has some type of physical location like an office or place of business, an employee, including a representative and independent contractor, stored inventory, rented or leased properties or tangible goods, or they make deliveries to a Pennsylvania address. Meeting the qualifiers for physical presence means the business would be maintaining a place of business in this Commonwealth. This is going to apply to most of you. The majority of you attending today will have a physical presence in PA. So let's quickly revisit bullet point 3, goods or inventory in a warehouse. Under Pennsylvania law, inventory stored in a warehouse, fulfillment center, or any other location within Pennsylvania creates a physical presence in the Commonwealth. This means that retailers who have inventory stored within Pennsylvania are required to register to collect and remit Pennsylvania sales tax on any sales made by the retailer directly to Pennsylvania customers. We are highlighting this one specifically because many people who sell online are not aware of this. Even if you sell through a marketplace facilitator and the goods are stored in one of their warehouses, but the end consumer is a PA resident, then you have physical presence in the state. So, speaking of online sales, this is a perfect way to transition into economic presence. So, even though an entity might not have a physical presence in Pennsylvania, they may have what's called economic presence. The Tax Reform Code defines maintaining a place of business within this Commonwealth to include having any contact within this Commonwealth which would allow the Commonwealth to require a person to collect and remit under the Constitution of the United States. That statement is referring to economic presence. If a business makes $100,000 or more in annual Pennsylvania gross sales, then that business would be considered to have economic presence, and they must collect and remit Pennsylvania sales tax. In 2018, the Wayfair versus South Dakota decision opened up the legal door to expand the concept of nexus beyond mere physical presence. In the Wayfair decision, the Supreme Court ruled that as long as a state had a uniform tax rate, did not apply the new law retroactively, and provided some sort of administrative assistance in making tax determinations and filing, economic presence is an acceptable standard in making businesses collect sales tax. The effect is to level the playing field for all businesses. So, in short, what we are talking about here is out-of-state businesses that sell to PA customers and establishing consistency in the requirements to collect and remit sales tax. Previously, when nexus was determined solely by physical presence, these businesses would have a huge advantage over PA brick and mortar locations, as they were not held responsible for the collection and remittance of sales tax. So, with the new law from 2018, out-of-state businesses are now treated similarly to PA business locations if they make over $100,000 in gross sales to PA annually. So I'm sure you noticed that I used the word nexus like a lot here. So let's quickly discuss what that means. Nexus is when a business has either a physical presence or economic presence within Pennsylvania. Sales tax nexus is just a fancy way of saying significant presence in a state. If a business is considered to have nexus in PA by having either a physical presence or economic presence, then they must collect sales tax on all taxable sales to PA customers. State sales tax is generally imposed by 44 other states. These states have similar concepts of physical and economic nexus as well. The main difference between these states is what we just covered for Pennsylvania will come down to the thresholds for economic nexus. Some states have a dollar threshold similar to Pennsylvania, although the dollar threshold can vary. Some states have a number of transactions or dollar threshold, such as 200 transactions or $100,000. To round it out, some states have a number of transaction and dollar thresholds, such as 200 transactions and $500,000 to establish economic nexus. I know that's a lot. Unfortunately, we cannot provide information considering the administration of other states' taxes, but there are resources available online to help you determine if you might have a filing requirement in another state. The next area we will talk about is exemptions. Unlike exclusions, which are usually items never subject to sales tax, an exemption is situational and dependent on who purchases the item and how the item is used. Pennsylvania law allows businesses to claim an exemption from sales tax for several different reasons. The exemptions are centered on certain business processes, and their taxability depends on who bought the item and how it's used. To claim an exemption from sales tax, you must complete the Rev 1220, that's R as in Rachel, E as in egg, V as in Victor, 1220, and disclose a valid basis for exemption. Keep in mind, the purchase must be consistent with the exemption reason being claimed. This form must be filled out to completion. You must select if the exemption is used for one or multiple transactions, fill in the name and address for both the seller and the purchaser, and select the exemption being claimed. Additionally, the burden of proof falls on the shoulders of the person claiming exemption. You must supply supporting documentation, when appropriate, to support your exemption claim. If the form is missing any of this information or the purchaser signature, the seller has the right to reject the exemption certificate and charge tax, as it will be considered incomplete. So let's go over some of the reasons you may claim an exemption in Pennsylvania. The first reason you may qualify for an exemption is if you are an exempt entity, such as a government organization or a qualified nonprofit. Items purchased by state and federal agencies, as well as PA school districts, are exempt from sales tax in most cases. Catholic and private schools will receive a 76 number to claim an exemption. Regarding construction contracts, the exemption is limited to building machinery and equipment and not the governmental organization. For nonprofit organizations or institutions of purely public charities, there is a limited exemption on purchases. An example of institutions of purely public charities include not-for-profit hospitals, volunteer fire companies, and churches. Organizations that qualify under this category are given a 75 sales tax number by the Department of Revenue. Now, when we say limited exemptions, we mean that there are certain requirements that must be met to consider the purchase exempt. These items or services purchased by these entities must be directly used in their charitable purposes. So, for example, let's say a church purchases a lawnmower for use for maintenance of their property. They will need to pay sales tax on this purchase because the lawnmower is not directly used in their charitable purpose. Additionally, all exempt items must be purchased in the name of and from the funds of the exempt organization. So, please note that if you have 501c3 status with the IRS, you do not automatically qualify for this exemption. You must file an application, which is the REV Rev 72. Once again, that is the Rev 72, with the department to determine your state exemption eligibility. If you are a business operating in a Keystone Opportunity Zone, a strategic improvement zone, or similarly designated state economic zone, you are given a sales tax exemption on goods and services used exclusively in the zone. Purchases made for items or services used by the business outside of those areas will need to include sales tax. Businesses qualifying for this exemption receive a 72 number from the Department of Community and Economic Development, or DCED. Next, you will want to consider how the item is being used. If an item is being used directly and predominantly by a business in an exempt business process, it will qualify for an exemption as well. Exempt business processes include manufacturing, mining, dairying, farming, shipbuilding, and timbering. Direct and predominant use means that the item is used directly in the exempt business process over 50% of the time. So here's an example. A manufacturing entity purchases a forklift that is used in 1, pre-production activities like raw materials, and 2, production activities like moving work in progress from one workstation to another, and 3, post-production activities like loading finished goods onto a truck. For the forklift to be exempt from sales tax, it must be used over 50% of the time in production activities. If it is used more than 50% of the time in activities that are not considered part of the actual manufacturing process, then there is no exemption. And finally, if you are buying goods and services for resale, you can complete the Rev 1220 to receive an exemption on the items upon your initial purchase, since you will be collecting the sales tax from your customer. Most of the time, this applies to retailers or wholesalers who purchase items for the sole purpose of resale. If you are deemed a retailer, or wholesaler, you will be issued an 8-digit number by the Department of Revenue. So here's an example. I own a car repair shop and I'm working on a car for a customer that needs a new part. I order the part from a place like AutoZone. The part is then being resold to the owner of the car once it's installed. Since I am purchasing the part for the sole purpose of reselling it to my customer, I should supply the Rev 1220 to AutoZone so I would not pay sales tax at the time of my purchase. Now, let's talk about the tax paid purchase resold TPPR credit. That credit is claimed by those businesses who are buying items without the intent to resell and later end up doing so. Unless, of course, you are in an industry specifically identified in the law, such as barbers and beauticians. The difference between this and the TPPR credit is that in this scenario, I am not using the part for use in my shop. Therefore, I would not be paying tax upfront as I am intending to collect it from my customer. And then just a side note about barbers and beauticians, they are required to pay sales tax on all purchases of equipment, materials, or supplies, regardless of whether the property is purchased for use and performance of services or for resale. So if you fall in this category as a barber or beautician, you must pay the sales tax, then claim the tax paid, purchase resold TPPR credit on your sales tax return. All right, use tax. When a seller does not charge Pennsylvania sales tax on a taxable item to a Pennsylvania purchaser for any reason other than a valid exemption, it then becomes the responsibility of the purchaser to pay the tax directly to the Commonwealth. This is called use tax. Use tax is the counterpart to sales tax, and these situations most likely occur when the seller has no nexus in our state. So as we just stated, use tax is not collected by the vendor or seller at the time of purchase, and then is the responsibility of the consumer. So, examples of when use tax is due is if your business makes purchases of taxable items over the internet, through toll-free numbers, from mail order catalogs, and from out-of-state locations that are not charging PA sales tax. So you, as a purchaser located in Pennsylvania, must essentially make a payment to cover the amount of sales tax that should have been included with your total at the time of purchase. This is the purpose of use tax. The tax rate for use tax is the same as sales tax. 6% state plus 1% local for tax from items purchased in, delivered to, or used in Allegheny County, or 2% local tax in Philadelphia. Many businesses believe they are saving money by making quote unquote tax-free purchases from out-of-state vendors, unaware that these transactions are often assessed upon audit by the department. Since assessments include interest and penalty on top of the tax, businesses in these situations have actually increased operational costs by not voluntarily addressing use tax obligations. So, now that we know who needs to collect sales tax, let's discuss how to go about registering for a sales tax license. This is the slide where I suggest you guys take out pen and paper. This is one of the most important things that you need to know. So, in order to collect sales tax, you must have a sales tax license issued by the Pennsylvania Department of Revenue. The license performs many functions, including demonstrating to the public that a business is a duly licensed agent to collect sales tax on behalf of the Commonwealth. It should be noted that if a business has collected sales tax without a proper license, they should coordinate with the Commonwealth to remit the money immediately, which means 30 days within collecting it. To register and obtain a license, you need to complete the PA Online Business Tax Registration application. If you have no pre-existing business tax accounts, you can use the registration hyperlink right from the MyPath homepage without logging into your profile. If you have any pre-existing business accounts, say like employer withholding, and simply need to add sales and use tax, you should log into your profile and use the business registration hyperlink. The reason for this is that by going through your logged in profile, you won't need to refill in your business's information for the application. It will come pre-populated when in that situation. But please be aware that citations are issued for operating a business without a valid sales tax license. Under Pennsylvania law, sales tax monies collected by a business on behalf of the Commonwealth are defined as trust fund money. The money does not belong to the business. It belongs to the Commonwealth. It must be handled according to the law and to department regulations. A business must meet the timely reporting and filing requirements. Proper handling of trust fund money helps secure the business by avoiding costly penalties. If you are an entirely new business to Pennsylvania, we recommend that you visit www.business.pa.gov. I'll say it one more time, www.business.pa.gov for all of your registration needs. This one-stop shop website was established to help new businesses get up and running beyond just setting up their tax accounts. All right. So now that you've signed up for your sales tax license and you're ready to make some sales, you'll need to know how to collect and remit the tax to the department. Of course, the first step to collecting sales tax is knowing the amount that needs to be collected. As mentioned previously, sales tax is 6% of the total purchase price, including warranties, which represent prepaid taxable services to taxable tangible personal property, delivery, and other services. An example of another type of service that would be included in the purchase price would be the charge for car detailing included with the purchase of an automobile. When it comes to deductions, the basic rule is any cost a business incurs in selling a taxable good or service when passed on to the purchaser is considered to be part of the taxable purchase. So, for example, if you take a look at your phone bill, there may be a list of a line item called universal service. This is a charge that telecommunications providers may add to your bill to recover their cost of federally mandated contributions to the Universal Fund. It is a cost of doing business for them, and they may elect whether to bill their customers for this. Coupons. Amounts representing on-the-spot cash discounts, employee discounts, volume discounts, store discounts such as buy one get one free, wholesalers or trade discounts, and store or manufacturer's coupons shall establish a new purchase price if both the item and the coupon are described on the invoice or cash register tape. So the receipt. A recent court case, Myers versus Commonwealth, affected how general discounts are handled. The court found the regulation does not require the coupon relate to a particular taxable item in order to reduce the purchase. Only the item and the coupon be described on the receipt or invoice. As the court noted, if all items on the invoice or receipt are subject to tax, then it is reasonable to determine the coupon applies to the taxable items and the purchase price may be reduced. Conversely, when all items are not taxable and the coupons do not identify to the taxable items, the description is inadequate and the amount of the coupon cannot reduce the purchase price. So, to put it more simply, in order to reduce the taxable purchase price, the receipt must identify what products the discount applies to, or all items on the receipt must be taxable. Filing and paying sales tax. Sales tax returns and payments must be filed electronically. There are 3 methods in which you can do this: online, over the phone, or using a third-party vendor. We strongly encourage you to use our online MyPath portal to file and pay your sales tax amounts. Not only are you able to file and pay for the current year, but you are also able to view previously filed returns, access notices that have been issued by MyPath, request statements of accounts that are available immediately after submitting your request, as well as send messages to the department and more. So another very important function is that you can grant permission to others, like your CPA, bookkeeper, accountant person, to also view information regarding your returns. You can access MyPath portal at www.mypath.pa.us or simply visit revenue.pa.gov and click on the icon that says MyPath right from the homepage. Please note that you must create an account to utilize this service. And then lastly, the department has third-party vendors who provide e-filing software for those taxpayers who do not wish to use the department's free e-filing options. A list of approved software vendors is available on the department's website at www.revenue.pa.gov. So there's some important things that you guys need to remember. PA3 forms are not available for download from the internet, and the use of other tax forms could result in non-filer notification and/or the misapplication of the tax payment. 2. Per regulation, taxpayers who are making payments of $1,000 or more must remit them through electronic funds transfer, also known as EFT. Failure to comply with the electronic funds transfer remittance requirements may result in an assessment of a penalty equal to 3% of the total tax due, not to exceed $500. The penalty may be imposed on all payments of $1,000 or more that are not presented to the Department of Revenue by an approved payment method. So, if every quarter you send a check for over $1,000, you are going to get hit with an EFT penalty every quarter. When you initially register for a sales tax license, your filing frequency will automatically be set as quarterly. Near the end of every year, the Department of Revenue reviews the average of the current year, first and second quarter sales, as well as the prior year, third and fourth quarter sales, to determine if the filing frequency needs adjusted. Semi-annual filers who have an actual tax liability of $300 or less annually. Semi-annual returns are due August 20th for the January to June period and February 20th for the July to December period. Quarterly filers are those with actual tax liability less than $600 per quarter, but greater than $300 annually. Quarterly returns are due the 20th day of the month following the end of each calendar quarter. So that would mean April, July, October, and January 20th. Monthly filers whose tax liability is less than 25%, $25,000, but greater than $600 per quarter. Monthly returns are due the 20th day of the month following the end of each calendar month. I know this is a lot of information being thrown at you, but thankfully, the department puts out a yearly due date calendar called the REV 819, that is REV 819, which is broken down by frequency to help you remember when your filing due dates are. You may find this form on the Revenue website. If your actual tax liability is $25,000 or more per quarter, you may be required to remit what we call accelerated sales tax prepayments. These are basically advanced tax payments made for those who have a high tax liability for the year. We will have more information available on accelerated sales tax prepayments in the future, but we have found that typically this is not something a new business needs to be concerned about right away. The Department of Revenue offers a vendor discount for timely filed returns and payments. This discount is limited to a flat rate depending on your filing frequency or 1% of tax collected, whichever is lesser of the two. If you collect sales tax on an item that you previously paid sales tax on, you can claim a credit for the sales tax paid when you originally purchased the item. So, here's an example. Ted owns an aluminum siding company, which makes half of its revenue in retail sales and the other half in contract work. He enters a construction contract to install 1,000 square feet of aluminum siding on customer A's house. Ted purchases the 1,000 square feet of aluminum siding at $3 per square foot, and he correctly pays the $180 sales tax on the $3,000 purchase price because he anticipates that he will be the ultimate consumer of the siding. Before the contract is performed, Ted decides to sell the aluminum siding at retail for $5 per square foot to customer B. At the time of sale, he properly collects $300 sales tax from the purchaser who bought the aluminum for $5,000. In reporting the $300 tax which he has collected from customer B, Ted is permitted to claim a credit of $180 for the sales tax which he had previously paid on this item. This is called a tax paid purchase resold credit, or TPPR credit. This credit shall be taken within 3 years of the original payment of tax on the item which has been sold. It is important to remember that this credit is not for those items that are purchased with the intent to resell. We will talk about exemption certificates in a little, which will cover those scenarios. Filing and paying use tax. Businesses who are registered for sales tax may remit use tax as part of their sales tax return. If you are familiar with the return, this would go on line 6. Businesses with ongoing use tax liabilities who are not registered for sales tax should apply to the department for a sales and use tax account through the MyPath system, which we discussed earlier. Businesses with infrequent use tax liabilities may use the department's online use tax payment option right from the MyPath homepage, which again is a non-logged in function. Individuals or sole proprietorships may also use line 25 of their PA40 personal income tax return to pay use tax. All right, so let's recap some of the general rules that we just went over. Filing and remittance occurs at different intervals determined by the department. You can be either a monthly, quarterly, or semi-annual filer depending on the size or the sales volume of your business. First-time filers will always be set up as quarterly until the department has a chance to review your sales activity to determine if the frequency needs adjusted. Due dates will always be due the 20th of the month following last day of reporting period. Again, Form Rev 819, which is available on our website, is there to help you remember when your due dates are based on your designated filing frequency. Local and state sales tax are filed together on one report. One thing that a lot of people are not aware of, but is very important, is that even if you have no sales for a certain period, you are still required to file a zero return. Think of it as an informational return, letting the department know that you had no sales for that period. You must do this in order to stay compliant with the department. No discount is granted on returns filed late. Penalty and interest will be added to late filings as well as late payments. Interest. For any late payment of tax, interest is calculated on a daily basis. It is calculated by taking the amount of tax due and multiplying it by the number of days past the original due date, then by the daily interest rate. The annual interest rate varies by year, so you will want to use the Rev 1611, that is REV 1611, to find out more information regarding how this is calculated. We will talk about this a little more later in the presentation. Penalty. The penalty for past due filing on a sales tax return is 5% per month from the date due until the date is filed, not to exceed 25%. If an underpayment penalty is warranted, it is imposed at a rate of 3% a month on the unpaid tax balance from the date filed to the date paid, not to exceed 18%. In no case shall the addition be less than $2. Please note, if the proper tax, interest, and additions are not remitted, the department will make an assessment. All right. Resources. So sales tax is one of the most, if not the most, complicated taxes for taxpayers to deal with. I know we've thrown a ton of information at you guys today about an already very nuanced topic. So let's talk about some resources that you can refer to, which are available on our website. The majority of these will be the same resources um, that I've mentioned earlier, and they will serve as reminders as to what is available. All right, so the Rev 717. We've mentioned this a few times throughout this presentation. The Rev 717 Retailer's Information Booklet is a great guide for determining goods and services subject to sales tax. It also provides some information on some of the other topics we discussed here today, as well as topics like petitions for assessments, um, construction contracts, motor vehicle lease tax rates, and more. All right, here we have the Rev 588, Starting a Business in Pennsylvania, a guide to Pennsylvania taxes. This is a fantastic resource that touches on all the basics for new business owners. This guide includes information for sales tax, as well as registration, employer withholding tax, and other items that go into owning and operating a compliant Pennsylvania business. And once again, this is the Rev 819, which we talked about when discussing due dates. This is the schedule we put out each year that breaks down filing and repayment due dates by filing frequency. The 2025 schedule is published and available under Forms for Business, Sales, and Hotel Occupancy Tax Forms. And of course, you can always search the form number on our website. Again, this schedule outlines all of the period end dates and the due dates, and even provides more information on the accelerated sales tax prepayment requirements. All right, this is the Rev 1611. This is the form used to calculate interest on all taxes due after January 1st, 1982. Earlier, we mentioned that interest is calculated on a daily basis. It's calculated by taking the amount of tax due and multiplying it by the number of days past the original due date by the daily interest rate. The daily interest rate is derived by dividing the annual interest rate by 365 days. The interest rate for any given year is established by the U.S. Treasury Secretary and is effective on January 1st of each year. So, for 2021, the interest rate was 7% annual, or 0.000192% per day. All right. We strongly encourage all of our customers to use our online customer service center. To do this, you can visit the URL listed on the screen or click customer service icon directly from our homepage. Here you can find thousands of answers to frequently asked questions. These responses are updated regularly to ensure that the information you are receiving is accurate and relevant. If you're not able to find an answer to your question through the FAQs or general website resources, you also have the option to submit a question to the department. This feature allows users to submit either a general taxability question or a more pointed question regarding a specific scenario to a trained representative who specializes in sales tax. We will review your submission and respond within 72 business hours in a process that is similar to receiving an email. And least we forget, the Customer Experience Center call center. Here, you will be able to speak to a representative skilled in whichever particular tax type you pick from the menu prompt. Our regular business hours are Monday through Friday, 8 a.m. to 5 p.m. Once again, Monday through Friday, 8 a.m. to 5 p.m. And voluntary disclosure. The Voluntary Disclosure Program provides an opportunity for businesses and individuals who have recently become aware of their Pennsylvania tax obligations to voluntarily come forward. In return for coming forward voluntarily, filing their returns, and clearing their tax debts, taxpayers are only responsible for the payment of tax and interest. Penalties for most taxes administered by the Department of Revenue will be waived when the requirements of voluntary disclosure agreement have been completed. In addition, taxpayers are only responsible for satisfying tax liabilities for up to 3 years plus the current year unless sales tax was collected from customers and not remitted. Unregistered taxpayers with the Department of Revenue who have collected business trust fund taxes but failed to remit those taxes may be eligible for the voluntary disclosure program. However, such taxpayers must remit taxes for all years collected. They will not receive a limited lookback. Penalties will be waived for all years. If a taxpayer is currently registered or was previously registered with the Department of Revenue, they are not eligible for the voluntary disclosure program. Taxpayers who the department has contacted and pursued collection actions against or investigated are also not eligible to participate in the program. Taxpayers interested in participating in the program should send an email to ra-voluntarydisclosure@pa.gov to request a case number. The email should include the contact information, mailing address, phone number, things like that, for the person requesting the case. Taxpayers pursuing a VDA should not register on their own for the taxes for which they are coming forward. The Voluntary Disclosure Office will register the taxpayer at the appropriate time. If you are registered and not currently charging tax correctly, you should correct this issue ASAP, as audits generally look back 3 calendar years, and you can be assessed for the tax that was due plus interest and penalty. All right, so that wraps up the module today. Hopefully it was informative and helpful. Thank you so much.
Thanks, Rachel. Okay. Let me see here. There was one quick question in Q&A. I'm going to launch the poll in the meantime, so that everybody has a chance to do a one question quick poll on today. We appreciate, Rachel, your time. We appreciate your team of experts so much. This has been great. I will just remind everyone that we will be sending out the recording as well as the presentation slides following today, along with an evaluation form. We want to know what information you're looking for, what you liked about today, what we can improve upon. This series will go through the rest of this year. And I hope that you plan to join us for the upcoming webinars. We have Withholding Basics on April 9th. We have Getting Started with MyPath on May 14th. We have Pennsylvania Taxes for New Businesses on June 11th. And then we will do the same webinar like today, Sales Tax Basics, on July 9th. The other thing that I guess I want to encourage everyone to note in their evaluation is simply like, is there information that you were looking for that you didn't hear about today? And if that's the case, then for sure, let us know and we'll pass that information along to Rachel and her team. Again, we are organizations that are continuing to improve to make sure that what we are presenting to you is as valuable as it can be for you. Okay, looks like a little bit of back and forth in the Q&A, so I don't want to end today's webinar quite yet. Let's see. Thank you to everybody who participated in the poll. And just, you know, once you kind of hear everything, you start to have questions. And we have some time here, so we'll just make sure that we continue it. Rachel, in your role, I guess I'm going to kind of go off script. In your role in the Customer Experience Center, are you working with business owners every day, answering questions, kind of like what we're doing today in the Q&A?
I do some of that. That is part of my job. One of the biggest parts of my job is I actually make instructional videos that teach people how to use MyPath.
Oh, okay.
Yes, so I do that on top of answering questions similar to how my colleagues are in the chat.
Okay.
Mhm,
And we cover those, or I guess we highlight those videos when we're presenting the Getting Started with My Path.
mhm.
Yeah, no, that's awesome.
Yep, they
Okay,
are a great resource. I highly recommend them for everyone.
super. That's great to know. And yes, those videos are very, very helpful. I know the My Path website is something that was launched within the last year and a half or so, maybe 2 years by now.
Business taxes came out, I believe, and anyone can correct me if I'm wrong, at the end of 2023, but prior to that, it was around for personal income tax. So it's been around for a
Okay,
good bit.
okay,
Sorry, Rachel, that
awesome.
was for the MyPath, the business taxes.
Yeah, weren't business taxes, didn't they come out the November 2023?
It was
That's the
November 30th, 2022.
2022.
Oh,
Yeah, it's been a
wow.
while. It's hard to believe it's
Yeah,
been that many
I
years
was
already.
close.
I
Oh my
know
gosh.
you're real close. It's
I
been
remember when
hard to believe.
Rollout 5 came out. That was a fun time.
Right at the end of the
Yeah.
year there. So we're a few years removed from that, but not that far entirely, but still a lot
Yeah.
of learning to do.
Oh my gosh, yes.
Are there any questions that the team wants to talk about or answer instead of typing an answer? It's up to you. We just have one more question as far as I can see.
Jason, did you want to take? Oh, Lisa's got it. We're good.
Yeah,
The
so the
drop
question
shipping.
in the chat is about drop shipment, which is kind of more of a complex inquiry.
Mhm,
Um, I'm going to actually put our resource account in there as well. If somebody needs further guidance or more information on that, we can actually provide our resource account to kind of follow up on. If it's something that's more complex and requires additional attention, we can always
mhm.
do that as well. I see Lisa's providing the response, but I'll put that in there as well, because that's more of a complex a topic that we have here for sales tax.
Yes.
I know. I know anytime I have questions, you guys have been very, very helpful and very responsive. So I really do appreciate that. Okay, so with that, I'm going to stop the recording